Eric, let's start with the big picture before we go on to the exchange there. The World Bank forecasting 5% economic growth for the Kenyan economy in 2013, but they've called for reduction in the cost of loans to boost economic activity.
Yes, certainly. They actually revised down the 2012 numbers from about 5% to about 4.3%. But yes, they're expecting a recovery in 2013. And as you've mentioned there, the monetary policy, essentially there's room to actually ease. And we've started seeing interest rates across the banking sector starting to come off slightly, which should provide a boost with regards to growth.
Now, the language that these big institutions use has called for a further reduction in the cost of loans. Is that going to happen? I mean, is something presumably that the banks would do if they could? Does this kind of pressure or call mean anything to the policymakers in Kenya?
I think the central bank has the ability to reduce the cost of credit in the economy generally. But I think they're also a bit wary. They've been very active on the repo market and mopping up liquidity, which suggests they are a little bit concerned on the currency front. So I think it's going to be a balance, but I think gradually they're going to ease. I mean, otherwise they're going to sort of restrict growth in the coming quarters.
Yeah, those rates have come down quite a lot already, down from 18% to 11% last month. So that's quite a big drop and very encouraging from that point of view. Are they justified in being concerned about economic activity going on hold because of the election next year?
Well, there's obviously the element of election-related spending coming through, but I think the private sector in general has been, the private sector credit has actually slowed quite significantly. We're now looking at single-digit figures of around 7%. In its highs, we were looking at almost 36%. So, I think there is room to actually even double the current figure to maybe around 16%. And that should be able to spark growth. You don't want things to slow down entirely before you kick them up. So I think the idea would be to try and get them up and running before the economy starts to stagnate.
Well, let's look at the exchange itself, the investment trading there. Looking at the agricultural sector, down 7.7%, and Rio Vipingo, the third biggest gainer, 45,000 shares. What's behind that?
Well, there was some news which came in yesterday with regards to them setting up a wind farm, and essentially that's to help improve their power supply. So that's really one of the key news that fed into a bit of appetite. But generally speaking, the agricultural sector has been facing a bit of challenges this year. The currency, as you know, has strengthened quite significantly compared to last year. So we're not expecting to see a significant windfall as they had last year. So generally, the sector is going to face a bit of challenges as we see the numbers coming through.
Agriculture, of course, always a volatile sector. It's cyclical, it's vulnerable to the weather, vulnerable to currencies and exchange rates, and its importance in the Kenyan economy. How important is it, just to remind us, of the agriculture sector and some of those big companies?
Well, agriculture really accounts for about 25% of GDP, and employment directly and indirectly about 60%. So it's a very important sector. If you look at the main commodities, you have tea, you have horticulture. We are a leading export of cut flowers to Europe. And then you have coffee. So you look at that as well as supplying raw materials to the manufacturing sector, and you see how important agriculture is, and the need to actually invest in this sector to sort of ensure that it's stable in terms of its output.
We've heard increasingly, though, about energy, oil exploration and so on. So the balance in the Kenyan economy could change, and presumably now is a time for investors looking at that energy sector possibly to get in ahead of the game.
Yes, and energy is a very big issue in Kenya. If you look at the current account deficit, about 10% of GDP, And if you look at the major imports, about 27% of imports is essentially oil. So even without looking at exports from the oil sector, just substituting what we import, you know, there you are really looking at a very significant improvement in the current account.
Yeah.
And obviously, you know, from the tentative numbers we are seeing, you know, there is room that, you know, it will actually be a significant find, and obviously that will be very positive for the economy.
Let's just finish by going into the banking sector. The big gainer yesterday by 3% on the exchange was the National Bank of Kenya. Any comment there?
Well, they posted quite disappointing third quarter numbers, and so you know, it lost quite significantly. I think now a bit of appetite starting to come through. I mean, nothing really driving the counter. I think there's a sentiment that maybe the new management, which sort of came in this year, will probably sort of improve the earnings momentum for the bank. But I think, you know, the market was quite disappointed by the third quarter numbers.